Welcome to this session from the Skilled MBA Case Study Series, where we analyze real-world challenges in finance and impact investing. Today's case, Balancing Impact, Modeling the Future at British International Investment, BII, explores how BII manages the delicate balance between financial returns and social impact. As a leading impact investor, BII must make strategic decisions that align profitability with positive societal outcomes. How does BII achieve this balance while ensuring long-term sustainability? What frameworks and models can help predict both financial and social outcomes? This session will provide insights into strategic impact investing and financial modeling. Let's begin. At its core, BII must navigate a dual mission: financial returns, maintaining strong investment performance to sustain operations and investor confidence; social impact, ensuring that investments generate measurable benefits for communities and contribute to sustainable development; robust modeling, utilizing advanced forecasting techniques to assess both financial and social impacts. This balance requires strategic decision-making, ongoing evaluation, and adaptive investment strategies. BII's impact investing model involves multiple stakeholders, each with distinct priorities. BII management, responsible for maintaining alignment between financial and social goals. Investors expect competitive financial returns while supporting sustainable and ethical investments. Investee companies, businesses funded by BII, implementing projects that drive economic and social impact. Communities, the ultimate beneficiaries of BII's investments, receiving job creation, infrastructure, and development support. Ensuring stakeholder alignment is critical to the long-term success of impact investments. BII faces three core challenges in achieving its mission. 1. Strategic alignment. How can BII ensure its investments equally prioritize financial and social objectives? 2. Impact measurement. How do they quantify social outcomes alongside financial performance? 3. Future forecasting. What modeling techniques can help predict long-term effects of investment decisions? Addressing these challenges requires data-driven decision-making and a flexible investment strategy. BII has several strengths that position it as a leader in impact investing: established credibility, strong reputation, and expertise in sustainable finance. Advanced modeling techniques, uses sophisticated methods for predicting financial and social outcomes. Strategic vision, clear understanding of how to balance profit with purpose. These strengths enable BII to set industry standards and influence the broader impact investment community. Despite its strengths, BII faces several internal challenges. Impact quantification. Measuring social outcomes remains complex and subjective. Goal tensions. At times, financial returns and social impact can conflict. Modeling limitations. Predicting long-term social change remains inherently uncertain. These weaknesses highlight the need for continuous improvement in impact measurement and financial forecasting models. The evolving impact investment landscape presents key opportunities for BII growing demand. More investors are seeking dual returns, financial and social. Industry leadership. BII can establish best practices and frameworks for sustainable investing. Innovation potential. Developing new metrics and impact assessment models to refine decision-making. By capitalizing on these opportunities, BII can enhance its global influence and investment performance. However, external risks could impact BII's operations and strategy. Economic volatility. Market fluctuations may affect investment performance. Political risks. Government policy changes could influence impact investment regulations. Public scrutiny. Increased attention on whether impact claims align with actual outcomes. Market competition. other firms developing alternative impact investing approaches. To mitigate these risks, BII must continuously refine its models and maintain transparent communication. 4 essential concepts guide BII's investment decisions. Impact investing, investments designed to generate positive social outcomes alongside financial returns. Financial modeling, analytical tools that evaluate investment viability and long-term sustainability. Strategic alignment, ensuring investments remain consistent with financial and social objectives. Impact measurement, developing frameworks to quantify and report tangible social benefits. Applying these principles ensures BII can effectively balance financial sustainability with meaningful impact. One approach is to prioritize social impact over financial returns. Approach: focus on maximum social benefits, even if financial returns are lower. Pros: stronger reputation in impact investing. Greater positive impact on communities. Cons: lower financial returns may deter investors, resource-intensive allocation and tracking. This approach works for mission-driven investors but may not attract traditional financial backers. A second option is a balanced portfolio strategy, which maintains equilibrium between financial and social impact goals. Approach: invest in projects that offer both strong financial performance and meaningful social outcomes. Pros: optimizes financial sustainability and impact. Increases stakeholder satisfaction and investor confidence. Cons: difficult to consistently predict dual outcomes. Requires continuous portfolio adjustments. This strategy is ideal for maintaining BII's long-term credibility and investment appeal. The final option prioritizes financial returns over social impact. Approach: invest in projects with strong financial performance, even if impact is secondary. Pros: maximizes financial stability and investor confidence. Cons: risks eroding social impact objectives, may weaken brand positioning in the impact space. This approach appeals to traditional investors but may diminish BII's commitment to social outcomes. To determine the most effective strategy for British International Investment, BII, we evaluate each approach based on 4 key criteria. Criteria: social impact. Priority: balanced portfolio strategy. Financial return: priority. Impact effectiveness. High: maximizes social benefits but may sacrifice financial returns. Medium high: ensures measurable impact while maintaining financial sustainability. Low: focus is on financial returns with limited impact considerations. Financial viability low. Higher risk of lower returns, which may affect funding. High: balances financial performance with sustainable investments. Very high: maximizes profitability but risks reducing social outcomes. Investor confidence medium: attracts mission-driven investors but may deter profit-focused backers. High: appeals to both impact-focused and traditional investors. Very high: preferred by investors seeking strong returns. Long-term sustainability medium: impact-driven but financially constrained. Very high: maintains financial health while driving meaningful impact. Medium: short-term financial gains but potential reputational risks. Key insights: social impact. Priority: maximizes positive change but may limit financial growth. Financial return priority ensures stability and profitability but risks weakening BII's mission. Balanced portfolio strategy provides the most sustainable path, ensuring impact and profitability coexist. BII should focus on a balanced strategy, refining its investment models to continuously optimize both impact and financial outcomes. From this case, we derive 4 key lessons about impact investing and strategic decision-making. 1. Mission and financial health must align. Sustainable impact investment models require both strong returns and measurable social benefits. 2. Impact measurement is crucial. BII must continue developing robust frameworks to track both financial and non-financial performance metrics. 3. Investor expectations must be managed. Not all investors prioritize impact equally. Clear communication and alignment are critical in attracting and retaining the right stakeholders. 4. Adaptability is key. Economic conditions, regulatory shifts, and social needs evolve over time. BII must remain flexible and responsive to external changes. By applying these lessons, BII can strengthen its leadership in the impact investing sector while securing long-term financial sustainability. Based on our analysis, British International Investment, BII, should adopt a balanced investment approach that integrates both financial sustainability and social impact. Our key recommendations include: refine investment criteria, establish clear benchmarks that equally weigh financial performance and social impact in investment decisions, enhance impact measurement models, improve data collection and analytical frameworks to track and report the long-term effects of investments, diversify portfolio allocation, maintain a diverse investment mix, ensuring a sustainable balance between high-return assets and high-impact projects, engage investors with transparency, provide clear communication on how impact objectives align with financial goals, strengthening stakeholder confidence, adopt a flexible strategy, continuously assess market trends, adjust investment policies, and refine strategies to adapt to economic and regulatory changes. Final thought. By implementing these recommendations, BII can position itself as a leader in sustainable finance, demonstrating that profitability and social impact can coexist successfully. Thank you for joining this session of the Skilled MBA Case Study Series. We now open the floor for questions and discussion